Good morning, everyone, and welcome to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, a lot to digest from the global markets as well as at home. But in the spotlight today, we're talking about a sector that has been a rank outperformer this year, and this is the PSU banking space. Now, Santo, of course, when you look at PSU banking space, generally the outlook for this sector for years and years now has been very, very pessimistic, very, very negative. But it seems it's having a breakout moment, it's having its moment in the spotlight this year. Of course, if you look at the cues, the improvement in the asset quality, the return of credit offtake in the economy, they have all slowly and steadily convinced investors that maybe PSU banks are not as bad an investment bed as they used to be, say, 5, even 10 years ago. Now, within the PSU space, of course...
Before you continue, just one line. Recency bias is what comes to mind, but I'll move on that later.
True, that is why I gave the context that for the past decade, investors generally would wanted to stay away from this, sector. And it used to be like, how sugar stocks are generally, treated with. That at best is a tactical bet. You ride the wave and then you get out at the right moment, but don't keep it in your portfolio because these are not portfolio stocks. But it seems like recently that opinion is changing, and I think two companies in particular from the sector have been aiding that view, and those are State Bank of India, of course, and Bank of Baroda. Now if you look at Bank of Baroda, Santo, it has been the best performing PSU banking stock, not only PSU banking but the best performing banking stock of 2022 with gains of in excess of 70% so far in 2022, and that has come on the back of not only because the company's asset quality has been improving very, very sharply. We have seen net profit jump quite sharply over the past 2 years because of the write back of a lot of provisioning that the lender had done. But recently, in the past 2 quarters, even loan growth, which has been one of the metrics that investors have been looking out for to reward these sort of companies, that has also come back. Now there is a bias at this point of time. Analysts are of the view that although the management has guided for a loan growth figure in the territory of 12 to 13% for FY23, it is very, very likely that the company will breach that loan growth figure. So overall, Santo, with the improving earnings profile, improving asset quality profile, improving loan growth, plus the fact that the bank is becoming more and more retail oriented than its earlier avatar of being a corporate focused lender, I think that means that going ahead in 2023 as well, we could expect this outperformance to continue as this bank tries to catch up to the big daddy in the PSU space, that is SBI.
Well, no doubt, CJ, the Bank of Baroda has been one of the remarkable turnaround stories of recent time. There have been quite a few false starts, no doubt, over the last few years. Even when there was a change in guard, expectations were quite high, but that didn't really play out that way. But in the last few months, definitely market perception about Bank of Baroda has undergone a sea change. And at this point, as you have yourself mentioned, it's the valuation gap very clearly. You're getting State Bank of India, which is the largest bank, at a little over 1 times adjusted book value, where at this point in time, Bank of Baroda is about what, 0.7, 0.8 times. And if that goes up to about, let's say, 1% or so, that itself is a significant jump from these levels. So I think that is what the market is betting on. Two things have happened here. One, the credit growth at this point is very strong, clearly, and with PSU banks, asset quality was the major concern till some time back. Now that is also passed out. You have a good, clean asset quality. You have PSU banks changing their approach, and you have strong credit growth in the system. So all in all, things are looking very good for Bank of Baroda at this point in time. Just, I would again, this could be the burden of the past, as I would call it. If you've been a long-term investor in Bank of Baroda, let's say, even if had you picked it during the lows of 2009, just to give you an example, you would have made what, barely about 4 times. It's been a 4-bagger in 13 years now. That is not, I would say, huge returns. It is decent returns, no doubt. So there is an element of recency bias here also. Things, because they are looking good, definitely people would think that this is a stock to get into and you can expect huge returns. But I would still be a little cautious, CJ.
Well, Santo, I think your caution, of course, because of the past is definitely justified. But I think one thing that has also changed in terms of what Bank of Baroda is doing recently in recent years, especially after 2018, is the fact that, you know, back in the day, Bank of Baroda was India's international bank. If you remember, you know, the tagline also in many of his advertisement campaigns also was that, you know, it was the face of India across the world. You talk about South Africa, you talk about Europe, you talk about US. It used to have branches almost across all, all places in the world. And probably that was not the wisest way to go about it. And I think recently there has been a realization, and that is probably one of the reasons why the company or the lender has been winding down many of its international operations over the years. And that has also helped improve the overall quality of the lending book that Bank of Baroda holds at this point of time. Investors clearly are impressed by the fact that the lender is trying to become more and more retail oriented, because generally if you're a retail oriented bank, as we have seen in the case of, say, for example, an HDFC Bank or a Kotak Mahindra Bank, and in the past 5 years even ICICI Bank, you tend to see better and more stable earnings performance, asset quality performance. Your exposure to large loans and movement in large loans and their credit worthiness tends to be much lower, and therefore the uncertainty in earnings also tends to be much lower. So I think this is a bank which is on the right path. It has been walking on that path for some time now, and it's only now that we are starting to see the results and therefore the stock performance as well. But I think going ahead, you could be pretty sure that this bank could be among the compounders within not only the PSU banking space, but the entire banking pack.
Well, and with that, let's get into the market setup for the day.
Yes, Santo, and the market setup is a little muted this morning. We are looking at a flat to sort of a negative start for the Indian markets. If you take the cue from what the SGX Nifty futures are indicating, even the cues from Wall Street overnight were not that impressive. Benchmark indices there, you know, ended in the negative territory after very strong retail sales data, clearly indicating that inflation at this point of time is not really impacting demand per se, even though we are hearing about tech layoffs, you know, job losses in the technology industry. Clearly that is not showing up in data points as far as the US economy is concerned. And very interestingly, Santo, another data point or news point that came out, you know, yesterday from Bloomberg, the China ETF, which of course has been underperforming with respect to the India focused ETFs the past few months, almost 6-7 months, that has now finally broken that downtrend against Indian ETFs. So clearly, and I remember, you know, yesterday also reading an interview wherein somebody said that with the China reopening now, it is very much possible that a lot of the money will flow towards China, especially in terms of foreign inflows. So going ahead, maybe you're concerned that, you know, whether we'll be able to, you know, blast off from the record highs or whether we will just touch them and fall lower. I think that may materialize if we see FIIs probably thinking that, you know, if you look at it from a fundamental point of view, Chinese valuations are depressed. That's an economy that has been slowing down and is trying to stimulate itself. And of course, there is Indian economy or Indian markets are extremely overvalued at this point of time. So there is a case maybe that the best of India in their growth story may have been had.
Well, yes, could cut both ways also, but let's not forget that the reason why Chinese valuations are depressed also have to do with the outlook on the economy there. And that said, relatively India's position looks still very strong. There's been the concern of overvaluation for some time now, but as we have seen in the past also, there are phases when the market can remain overvalued for long periods of time. So very tricky to take a call on that one, CJ. So I would at this point still bet on the uptrend remaining intact. The big gains, that kind of gains that you saw over the past few months, you may not see that immediately, but clearly the medium-term uptrend to me seems intact. And a big positive, I think, again yesterday you've seen domestic investors turn buyers in a big way. It looks like almost as if domestic investors look at what foreign investors are doing, and the moment foreign investors are sellers for more than 3 or 4 days, I think domestic investors see that as a sign that you should be getting bullish on the market.
Exactly. Yesterday, I think if I'm not wrong, the net buying figure of DIIs was almost 3x of the net selling figure from FIIs. So clearly indicating that DIIs are now sensing that maybe the best of the FII inflows of what $2.5–3 billion that we have seen in the past 2 months may be over going ahead.
Yes, and some cues from the F&O market. You're seeing long unwinding in futures of Delta Corp, Syngene, Cummins India and Hindalco. There is long build-up in Kotak Bank, Hindustan Aeronautics Limited, again the numbers have been pretty good there, Honeywell Automation and Balrampur Chini.
Well, Santo, thank you so much for those FNOQs. They're always very timely and resourceful. Moving on to the newsmakers of the day. Now, the first stock there would be, of course, Paytm. The company will be in focus. The stock will be in focus because the lock-in period for the pre-IPO investors of the company will be ending today. So it will be a very important trigger to see who will emerge. You know, the big sellers that everybody has been so fretting about over the past 1 month. Now already news has come in that SoftBank is looking to offload about stake worth about $215 million through a block deal today. So probably as the market opens, you will see that block deal going through on the exchanges. Now the selling price that SoftBank has set for this block deal is about at a 7% premium to the current market price that is ongoing. So even though we have already seen such a depression in prices as far as Paytm is concerned, it had to provide another 7% discount on top of that depression to convince investors to buy shares worth about $215 million from its hands, Santo.
And to me, the newsmakers probably would be many of them. In fact, Reliance Industries, Chennai Petroleum, ONGC and Oil India. Now, the government has made revisions to the windfall taxes. The windfall tax on crude has been increased to 10,200 rupees from 9,500 rupees per ton. Export duty on diesel has been reduced to rupees 10.50 from 13.50 per litre earlier, while export duty on petrol remains the same at nil, and on ATF it is at 5 rupees per litre.
Well, Santo, talking about brokerage bets, which is your top brokerage bet of the day?
Well, Dr. Bector Foods by
Dr. Bector,
yes, by ICICI Securities.
Of the three doctors that are popular, this is the least one, I think, on the market.
Which are the other two?
Dr. Reddy's and Dr. Lal Patlabs.
Yes, this is I think this is by far still more popular than the other two.
Is that so? Oh,
so Dr. Bector Foods here, strong revenue growth and improvement in gross margins. These are the two triggers which have been mentioned by ICICI Securities. Now going forward, input prices are likely to ease, so that should provide some relief as far as the margins of the company go. And in addition, the company is trying hard to increase its distribution reach, and besides it's also investing in new technologies. These two will be the other key growth catalysts for the company according to ICICI Securities, which has a buy rating on the stock with a target price of 519 rupees.
Well, thank you, Santo. My top brokerage bet of the day is Sobha from the real estate space. Now, Choice Broking had come out with a report. They have retained their outperform rating on the stock with a target price of 857, which is very specific, by the way. Generally, you see, brokerages round figuring their
519 was also a very precise target.
Exactly my point. So clearly, the analyst is very, very convinced about what he is expecting from this company. That said, I mean, let's look at the arguments that Choice Broking has given in favor of Sobha, and they're talking about the fact that given the fact that the company has very, very, very low inventory level, there's a possibility that going ahead there could be very, very aggressive project launches coming from the company, which will of course be pretty good given that the fact that we are seeing real estate prices inching higher and higher all across the country. That said, Choice Broking also said that the company owns very large amount of land parcels across the country, that too at a very, very cheap rate, historically cheap rate. So that means that for the cost for project development also for Sobha would be very, very low. And lastly, very importantly, Sobha has been able to cut down its net debt figure consistently over the past few years, largely because of the fact that it has been generating good amount of cash flows from its operation. If you look at the second quarter itself, the company was able to generate cash flows of in excess of 200 crores just in the second quarter, and that has helped it to pare down its net debt. So because of these three factors, Choice Broking has retained its outperform rating on the stock, as I said, with the price target of 857 rupees.
Well, Hindustan Aeronautics is the first stock on my watch list this morning. Strong set of numbers there, but most importantly, CJ, the company has increased its growth guidance for FY23 to FY25 in its repair and overhaul and spares segment. Now, why is this important? That's because these constituted close to about 73% of the first half revenues.
Yes,
now, the margin has been almost doubled to about 10 to 12%. It was 5 to 6% earlier. So that's a very positive outlook. Now, for this year and next, for FY24, you know, the number of helicopter orders, that is supposed to be slightly less, but at the same time the company plans to make up for that with a greater focus on the repair and overhaul and spares segment. Also, the EBITDA margin for FY23 has been increased to 26 to 27%. Earlier it was 24 to 25%. And lastly, order book position very strong at 92,000 crore rupees for the next 2 years.
Well, Santo, before I give out my take on HAL, let's take a quick check on the market. And clearly, it's been a negative start. The Nifty and Sensex down about 0.3% this morning. So it looks like we are unlikely to hit those record highs that everybody was expecting. But we don't know. Later in the day, you never know. We might
still have 5.5 hours or 6.5 hours of trading still left at this point in time. The market breadth pretty even Stevens there. 900 stocks are up and close to 800 stocks are down at this point in time. Tata Motors, Hindalco among the losers in early trade, down about 1% each. Titan is also down about 1%. Nifty mid cap flattish, it's slightly lower in fact, down 0.2%. Nifty Bank is also down by 0.2%.
Yeah, and Santo, if you look at the VIX index, that is clearly climbing higher this morning. The India VIX index is higher by about 3.2% at about 15.1. Now it has, I think, given up a lot of those gains, so clearly not a good start as far as volatility is concerned. And on the Nifty small cap side, again a very tepid start it seems for the morning. The Nifty small cap index is down about 0.2%. So overall, nothing really outperforming in this market. It seems the broader market as well as the benchmark indices or the frontline indices are doing quite bad.
Quick alert on Paytm though, the stock is down 7% in early trade.
I think the block deal has already happened. So 4.68% of equity has changed hand on the Paytm stock. So clearly it seems like that SoftBank block deal that I talked about earlier, Santo, worth about $215 million, that has now taken place, and that you can see the impact on the stock. The stock is down exactly the amount that the discount that SoftBank has offered for its stake sales. So moving on, coming back to Hindustan Aeronautics and Santo, although fundamentally yes, the stock has been looking quite good. If you look at in terms of earnings performance, you look at in terms of the order inflows that it has been getting and the improvement that we are seeing in the order book as well. But if you look at it from a technical point of view, given the fact that the stock has run up so much, it's almost been a one-way rally for HAL this year. I think the stock is looking a little overcooked on technical charts, and I would not be surprised if we see some bit of consolidation coming into the stock over the next couple of months as investors wait for more delivery on or execution on the projects or the new projects that the company has got. Apart from that, of course, the biggest risk for HAL will be any sort of delay in the execution of the recent orders that it has won. Order inflow, if you are delayed on execution, that can of course delay the revenue realization that can happen, and that is never a good thing as far as a company like HAL is concerned. And lastly, and this is of course a limited point, it depends on how the government's budget evolves, but the recent surge that we have seen, Santo, on the subsidy bill side, remember government subsidy burden has gone up to as much as 5 lakh crores from the budget estimate of about 3 lakh crores. Now, when that generally happens, you tend to see government cutting corners on certain other parts of the budget, and it just feels that maybe defense would be probably the first space where you could see some bit of cost cutting coming in, or corners being cut. So I would be a little wary of this optimistic, the almost near exuberance that the market has, that that order inflows will just keep on flowing and flowing and flowing for eternity for many of these PSU defense stocks. That may not be the case. We have been there in the past where when railway budgets used to come out, railway stocks will jump every time during budget in the hope that, oh yes, the government is going to come out with 50,000 crores, 1 lakh crore worth of orders. So of course these companies are going to do well. And then by the end of the next year, you would only realize that 25,000 crore worth of orders have come in. We have seen that in the road construction sector as well. Wherever there is B2G, that is business to government, there are always issues with respect to delay in order inflows as well as delay in payments. So all of you guys who have been betting so big on defense, do not forget the past. The past tends to repeat itself time and again.
And I also noticed that you got a new word in your lexicon, overcooked.
Overcooked. Yeah, I mean, I was tired of using overbought, so I started using overcooked. That said, the stock on my radar today would be from the NBFC space and largely from the housing finance space. And this is Home First Finance, probably one of the best stock performers within the housing finance space over the past 3 to 4 years. Now, Jefferies has initiated their coverage on the stock, and they have given a buy rating on the stock. So clearly a good vote of confidence coming in from a foreign brokerage. And the reason why they have initiated coverage is because they're expecting the company to report 30% annualized growth in loans over the next 2 to 3 years, so which is a very, very healthy loan growth rate. Apart from that, they're expecting net interest income to grow about 28% on an annualized basis, despite the fact that the margins of the company could come under a little bit of pressure given heightened competition as well as rising cost of borrowing for many of the NBFCs. Lastly, overall, analysts are expecting that asset quality of the company will also continue to improve, which should also bring down the credit costs that had recently risen for Home First Finance. So overall, the stock is looking quite good. The outlook for the stock is also looking quite good, and this could be one stock that could be on a lot of investors' radar in the next 12 to 24 months.
Well, definitely on the fundamental side, the performance has been quite consistent if you look over the last few quarters, and yet you've seen a sharp sell-off in the stock. The stock is down by close to about 30% from its peak, and this interestingly comes despite the steady performance as far as the operating parameters.
I think, Santo, the problem with the Home First Finance has been the NIMs. I think their NIMs have been contracting. If you look at it on a sequential basis, their NIMs have been contracting, and their asset quality also is not improving probably as much as, say, Aavas Finance's asset quality has seen an improvement. So I think on a relative basis, investors have been a little harsh on the company. But when you look at it from an absolute sense, as you said, the earnings have been quite good compared to the 30% downtick.
Definitely, and in a market where just about anything and everything has been rising, you've seen investors not willing to take on a bet on a company which actually caters to the more affordable segment of the market. That said, the next stock on my watch list is RailTel Corporation Limited. Now, second quarter numbers were quite weak, but the company has guided for a 20% growth in revenue and EBITDA for FY23. The order book stands pretty robust at close to about 4,500 crore. It had been 5,800 crore in the first quarter, but the company has actually adjusted it. But even at 4,500 crore, it's pretty much a very robust order book. According to ICICI Securities, this year the company is expected to do close to about 1,000 crore in its project finance business revenues, and also the new businesses like consultancy services and also monetization of some of its assets. Those could be the key growth triggers for RailTel going ahead.
Well, Santo, no real argument against your, the favorable outlook that you have given, of course, for the company overall. I think this is a company that is, of course, not performed that well since the IPO had happened, and generally railway sector companies tend to not do that well in the long term, so that will be my only concern. But recently, of course, the past week or so, we have seen a lot of railway related stocks come into focus. People are expecting strong order inflows for these companies, strong revenue projections also for FY24. So it will be interesting to see if we do see all of those things materialize. But at this point of time, I'm still a little skeptical, given that this sector really is not a really high growing sector and has always had issues given the government, the large part that regulators or government plays in this space.
Well, that said, the last stock on our watch list this morning is Vesuvius India. Now, the steel industry in general may not be doing very well, but definitely things have been looking quite well for Vesuvius India. The stock has been on a roll since after touching close to about 950 odd in March this year. From there, it has almost doubled to the current levels. Now, Vesuvius India is in the business of providing engineering services and solutions to steel companies, and it is also in the business of refractories. So, outlook on steel production in the country is quite positive. It's almost grown by 6% in FY22, and it's also expected to grow about 2% this year also. So, as long as steel companies are expanding capacity, it's good news for companies like Vesuvius India. ICICI Securities is one of the brokerages which is bullish on the stock. I beg your pardon, Moneycontrol Pro is quite bullish on the company here, and it has termed it as a proxy play for higher steel production in the country. And if you look at the second quarter numbers, this was the third quarter where consecutively where the company has been able to deliver double-digit top-line growth, and more importantly, it has been able to pass on higher costs of its raw materials onto the customers, which clearly shows strong pricing power.
Yes, Santo, and I think if you, the recent commentary that came out from the Steel Ministry also, there was indicated that they are expecting that per capita steel consumption in India will rise very sharply over the next 5 years, and also India's overall steel capacity will also double in the next 5 years. So clearly a good outlook coming as far as the production level, production side of things are concerned for the steel sector. But for me, I think the stock is looking very, very overbought, Santo. 72% rally in 6 months is just a very compact period in which the stock has really shot up. So it generally, I mean, if you've been in the market, you realize that generally when this happens, this tends to happen, you start to see some bit of profit taking emerging. Perhaps now we will see that towards the end of this year, and I would not expect this sort of a run rate of returns on the stock continue for a very, very long time. Also, if you look at it from a returns portfolio, point of view, return ratio point of view, Vesuvius India's return on equity as well as return on capital employed has actually been running lower than the current cost of capital in the economy, which is generally not a very good sign if you're looking for long-term compounding of your wealth from a company. I think that could be probably one reason that could make longer-term investors a little wary on the stock. But if the company can show signs of improvement both on the return on equity as well as return on capital employed, then I think going would be pretty good, given that the overall outlook is very, very strong as far as Vesuvius India is concerned. That said, let's move on to some of the stock queries coming in from our viewers, and thank you guys for sending them in. Now, Sano, Abhimanyu Vyas has asked us, of course, it's largely directed to me, but I will also want your thoughts on this, that does economic downtrend augur worse for private banks or for public banks, considering the fact because of the fact that asset quality as well as the government support that PSU banks tend to get during downtrends in the banking space?
Well, economic trend in the past downturn in economies have hit PSU banks harder. Yes. That is largely also because they've had a larger corporate book, but since then they've all fine-tuned their strategies. So if you look at the case of even public sector bank now, they're trying to make more money from the retail side of the operations. Of course, whenever the economy picks up, automatically exposure to the corporate side also goes up. Yeah. But this time they seem to be less vulnerable to a certain extent, whereas if you look at PSU banks, they are also indirectly under compulsion to lend to certain sectors. Those kind of restrictions do not really apply for private sector banks. So when a downtrend hits, it's usually PSU banks which take a bigger share of the pain.
Yeah, and I think, Santo, generally countries tend to learn lessons from certain economic periods, right? Between 2004 and 2012, at that point of time, given the focus on growth, given the focus on infrastructure development, there was a little bit of leniency as far as underwriting loans are concerned. People were willing, or lenders were willing to take bigger risks, given the fact that the past few years had been pretty good. But the past decade has been very, very bad. We have seen a lot of those zones that were shelled out during the 2004-2012 period turn quite bad, and that led to a very, very bad downturn for the general economy and the banking sector in particular. So going ahead, of course, the scars of the past will of course make public sector banks much more wary. They are already quite wary as far as corporate loans are concerned. They're only focusing at this point of time on retail loans, reforming their technological level. They're trying to catch up as far as technology is concerned to a lot of the private sector peers like ICICI Bank and HDFC Bank. So probably going ahead, of course, any sort of economic downturn, given the greater retail focus, will have a lesser adverse impact than probably in the past when, as Santo said, the exposure to corporate loans used to be much more bigger compared to retail loans. Santo, another thought coming in from Midhun Raj Thadadil, and he's asking, what is our opinion on Zomato selling off their UAE, food delivery business to Talabat? Now, I think Midhun Raj, I think overall, if you look at it, this seems like in part or part of the overall strategy of Zomato to largely focus on profitability instead of expanding itself in every market. They're trying to bring back the focus back home, and I think generally investors should look at this kindly, given the fact that recently in the conference call also a lot of the analysts were very impressed by the language and the commentary that Zomato gave with respect to its path to profitability and the the timeline it has given for the profitability or achieving that profitability going ahead. So I would not read too much into the selling off of the food delivery business. They are still retaining their presence in that market because of providing discovery services as well as dine out services as well. But apart from that, the reduction in the presence of giving away food delivery business seems to be in line with the overall strategy to make the company more capital efficient and of course return to profitability as soon as possible, Santo. I think.
And yes, with that, let's wrap up this edition of Markets with Santo and CJ. Thanks for watching, and also thanks for sending in your queries. Please do send more and we'll try to answer them as long as time permits.
And guys, as usual, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live at 3 p.m. Till then, have a great day.